Why did you keep working if financially you didn't have to?
Because I didn't know myself. I didn't know what I wanted to do. What I miss is building stuff. I like going from 0 to 1. I like that early stage from my idea and building out something, and can that become a business? And I love building businesses. And once I learned that, then all of a sudden I'm like, you know what? I think I can build a business model around that. And it just so happens on the backdrop of AI, I thought like that there's a good, and again, park the rationale for it, but like it really was around a matter of like finding my purpose.
AI, ML.
My guest today is Cory Janssen, co-founder of Investopedia. Cory sold the business 17 years ago, but what came next was far from the smooth ride he or anyone might have expected. He spent years in painful trial and error, half-heartedly starting new ventures while avoiding real work, experimenting with professional investing and retirement. None of it satisfied his deeper need for the sense of purpose he felt while building Investopedia. Everything changed when Cory went back to building and working, but this time it felt different. His focus shifted toward unselfish, larger impact goals. His new non-monetary motivation gave him powerful drive and a clear sense of direction and alignment. Today, Cory finally feels deeply fulfilled, energized, and joyful. There is so much to learn from Cory's story, and we are so lucky he agreed to share it openly. It's rare, raw, and packed with specific, practical insights for anyone navigating the complexities of post-exit life. Hello, Cory.
How are you, Anastasia?
I'm very well. Cory, I am so excited about our conversation today because for me, you are such a unique guest. You've tried so many things that many people in my audience are only thinking about. You've made a lot of mistakes. You romanticized things that many of us are still romanticizing. And you learned the hard way why certain things should not be romanticized. And I want us to go very deep into those traps, because you and I both know that sometimes we get stuck in those traps for years. Mm-hmm. And that's exactly what we're trying to avoid. And that's my mission with this podcast, to help people not get trapped in those things and move through the post-exit journey as smoothly and efficiently as possible.
Totally. And, I've been looking forward to this. It's like you've become the Joe Rogan of exited founders, right? So no one goes as deep. So I'm looking forward to sharing the good and the bad and the stuff that people don't talk about.
Well, thank you so much. Flattery will get you everywhere, right? So Cory, to kick things off, I want us to talk about Investopedia, the company that you sold 17 years ago.
Oh, you're dating me now.
But I personally owe you a great debt of gratitude for creating that company. After my own exit, I found myself drowning in conflicting and biased investment advice. And Investopedia became my anchor, a trusted voice of reason that I could actually rely on. So thank you for that.
Well, you're two guys. People have either never heard of it, or they come up and they say, like, I would have never gotten through my MBA or my CFA without you, right? Yeah. So it's kind of an interesting thing where it's that niche product that was there, that if you've been in finance, especially of that generation, so I appreciate that.
No, it's absolutely fantastic product. And the first time we met, I immediately told you that I'm so excited about Investopedia and love it so much. And even today, it's still the one source that I fully trust and get educated from. Another reason I want us to focus on that company first is because, as you know, this podcast is about how founders feel post-exit. And we talk about emotional, intellectual, social, financial challenges. But so many of them are deeply rooted in what happened before an exit.
Yeah.
So your turn now. Tell me about Investopedia, why you started it and why you sold it.
So I actually started Investopedia with a friend of mine, also named Cory. His name is Cory Wagner. in the late 90s. So technically we started working on it in 99, formally incorporated in February of 2000. And for those who are good at stock market trivia, the peak of the NASDAQ for the dot-com bubble was in March of 2000. So we literally were like right at the end of the first dot-com bubble. And I was actually still in university. I was a second-year college kid. And I'd like to say we had some amazing plan, but essentially we would go and we'd be studying after class. And at that point, and this sort of it's funny to think about now, but all these startups would raise money and then buy ads in Business 2.0, Red Herring, these big magazines. So these magazines would be thick with ads, right, from all these dot-com startups. And so, what are a couple 19-year-old kids going to do? We got to start a .com. So we actually brainstormed a number of sites. I mean, Investopedia was only one of them, but essentially wrote out the biggest, baddest website we could think of, sort of Yahoo Finance meets TheStreet.com meets The Motley Fool, and basically all the sites we loved, said, can we create something better? As we actually got down to doing the work, we realized we probably didn't have the resources or the skill to do everything. So we just started off on the education section. And we did that because we figured if you can write the content timeless, in a timeless, evergreen fashion, we could get to the rest of the fun stuff. It turned out that we actually kind of stumbled upon this, this niche that no one else was really focusing on. And so it just became educational content and tools. But it was really by accident, to be completely honest.
Yeah. You were very early in this game because obviously now online education is booming, but back then it was such an unusual idea, wasn't it?
This is before MOOCs, before anything moved online. I mean, there's no Coursera, there's no, YouTube was sold at, I have to check the exact date, but this is before social. So like the web 1.0, 2.0, it was a different world. I remember it was a huge day when we got listed on Yahoo, right? It wasn't the same search engine optimization game that it is today, and there wasn't the same mix. So often entrepreneurs will ask me about that sort of formula, and they said, hey, things have changed so much, you can't use that same playbook. But it was really just about creating great content, and at first it was us writing. We would just lock ourselves in a room and while we were studying for our CFAs and going to school, we were just cranking out content. And over time, attracted a couple hundred contributors, think like a small hedge fund manager, a CPA, and we'd write really, really in-depth content. But the world was actually changing because, at that point, people were still just hiring a bunch of journalists, sticking them in a room in Manhattan and launching websites. The whole idea of creating your own content, it sounds just obvious now, but that was kind of new, right? And so building the system from because we weren't journalists, so we didn't know what we were doing, that was actually our edge. We just tried to create stuff that we wanted to read.
But it's amazing how you went from there to where you are with AI, and we'll talk about it later. I don't want us to jump all the way there yet. But I want this interview to show your whole path, how your thoughts developed from those very early days to today. But let's talk about how you decided to sell and why.
We initially, keep in mind, this is, at early 20s, right? We were hiring people out of our classes at, I live in Canada in the University of Alberta. I would go to my class and there'd be, people that would be working internships that were in that same class that were working for us. So our first goal is we just wanted to pay off our mortgage. And, I think at that point it was a few $100K, right? And so we're okay, we had just, okay, that's amazing, right? And then, well, how do you set the next goal? Well, we want to be millionaires, right? And, you'd kind of get through because we never raised capital, we actually had to just, make money the old fashioned way. It was just, and Investopedia was a cash flow machine because you create the content once, it's timeless. It's like an annuity. And so because we had costs that were low and, we were just a couple kids doing this and really just focused on literally month to month cash flow, we'd get to the year and do a kind of a bonus out. And so, eventually a couple of years later, we said, okay, well, we want to be worth $1 million. And I remember at some point we passed that. We're like, okay, well, now what's next? Okay, well, I don't know. I guess you add a zero, right? Like it was at that point, it really didn't have anything to do with values and purpose. I mean, that's just who, we were just a bunch of immature kids. And so at some point though, you can only sell, like our big clients were like E-Trade and Charles Schwab and Ameritrade. Like this was the first kind of the golden age of discount brokers. I mean, it's almost hard for younger listeners now to think about with Robinhood and all this stuff that is free. Like this was a big thing that you could trade stocks online. But you can only sell these brokers so much advertising per month before that you actually have to show up in New York with a tie, right? And
absolutely.
Like we hadn't met really any of our clients in the first few years. Like we went to one conference in Vegas where there was sort of one ad network that we sold through, and we almost became like bigger than the rest of the ad network, right? And so we had managed to, because again, this is before video calls and all as well. Like we were cold calling people to sell ads. Like no one really knew that it was a couple of 20-something-year-olds from Canada that were doing this financial education site. And so at a certain point, we realized like we were getting so many inbound requests. We said, okay, well, we're wasting all this time when all these brokers are calling and kind of like dialing for dollars. And you can always tell when it's somebody on the other end just sort of filling you into their CRM, trying to get information on. Said, we either need to kind of like really figure out how to sell and build out a whole sales team across the US, or we need to partner someone who knows what's going on there. So let's run a process. So we hired a banker from Silicon Valley. As a guy, he actually taught the negotiation class at Stanford, which we can come back for. And so decided to actually say, like, let's actually go with it and do this formally, because we were just wasting time on everything else, right? Like every time people are calling. Now, I mean, and we could get into all the things of like what we did wrong there and that, because I would never do that again. But it was like completely opportunistic. We weren't really thinking about that from like a real, like, again, keep in mind.
Actually, Cory, I would love that. Can we go through the things that you wouldn't do again? Like, what would you tell people who are about to exit, what to be aware of?
We did one good thing, which is, as we went down the process, my partner and I, we both wrote down on a piece of paper how much we wanted to sell for and what we would do with that money after the fact.
Okay.
And it was funny, like it had nothing to do with the value of the business. It was like, well, I think I need, a couple $1 million for a house. And I think I need, like this much for, public equities. And I might want to start another business. So I want that. Like we both literally just kind of like did on literally on a piece of paper. We didn't show each other, and we put that in an envelope and we sealed it and we put it into the debt. Mm-hmm. We still had, paper then.
Cool.
Now that was really valuable because when we got really in the negotiation process, we were pissed off because like, there was a tax issue and it was going to cost us a few $1 million or whatever. And so then, we were all angry, but there's so many emotions in a sales process. It was grounding because we went back and we looked at that paper and said, wait a minute, 6 months ago, we said we would have sold for this. We're already going to sell for more than this. Let's keep things in context. So that was actually a really good tip. And I think as you get to emotions, I tell entrepreneurs that all the time, just writing down what your expectations are so you're grounded. That was good. But it wasn't based upon what I wanted to do in my life and purpose. And like, if I don't know, for myself, if your goal in life is just another zero on wealth and it's not about creating something, I mean, there's something like that doesn't work for me. It's just sort of doing it. Money's important. I want it for the money. Don't get me wrong. I'm a capitalist, but we were so immature. We weren't really thinking about like what was next or why were we selling or what were we going to do with that? It was just, well, that's what entrepreneurs do, right? Like that's how you win the game of founding a company. You sell.
Have you ever regretted selling?
Yeah, big time.
Yeah, really?
Because the purchase price wasn't disclosed. It's never been online, and I agreed with my partners that we would never talk about it. And so like it was, but we do know that it changed hands a few years later for a significant amount more, right?
Okay.
Yeah. We think even like 100 million more, right? And so you kind of go. So there's now, and everyone says, okay, well, hindsight, and that's true, but again, it wasn't just like when we were thinking about like when you have a business that is throwing off significant cash and you're having fun doing it and you're building something meaningful and you're making a difference in people's lives, I don't think we realized how good we had it. Because afterwards we'd go out and try to replicate that, and it's like, wow, our business, man, our margins were pretty good, man. We threw off a lot of cash, right? So I couldn't replicate that with buying another business. We had a great team that like we, it was a relatively small team, like under 50 employees, but like, we could have scaled it in a different way. And so there's the regret from the financial point of view, but then I think as I reflect back, I was more unhappy after I left than at any point in my life.
Why is that?
So we sold in 2007, and then the first year was okay. But then there was a financial crisis, right? And so even though we were actually doing okay, when there's pain at head office, then you need to feel pain as well, right? In one of the subsidiaries. So I always remember Tim Forbes had flown up to Edmonton after the deal, and he came up in his private jet and was like, oh, it's Tim Forbes. And, and I said, oh, Mr. Forbes, okay, we got the deal done. Now what? And he just turned to me and said, don't fuck it up. He was awesome. Cool. I huge respect for him and the Forbes family. But, I was on my own. We were basically on the own for the first years. We had a 2-year holdback. And so for the first year, we just kept on doing the thing, and it was still fun. I mean, you didn't have the equity upside, but you wanted to do good on it. But then like any organization, they start integrating in the acquisitions, and then all of a sudden you're dealing with there's all these loops to get through, and you're no longer in control of your own destiny. And so it got frustrating. So at that point, I remember driving to work one day, and I love to get to my desk early in the morning. Like you're thinking I've got like a 20, 25 minute commute. You're thinking about the day. It's almost like, I don't know. It's weird. It's almost like like this meditation going through. Like I realized for the first time when I was driving into work one day that I didn't want to go to work, and I'd never felt like that in my life. So
yeah. So you didn't expect that. You thought your motivation will stay the same, right? You probably didn't think much about it.
We just didn't think about it. And that's, to summarize up your previous question, the bottom line is we didn't even know the questions to ask ourselves. We were just saying, okay, well, our goal was to get to 1 million, then our goal was to get to 10 million. And so like, that's what you do, right? Like, so just.
Yeah, we focus so much on money, and we think, we're just selling something like another object, whatever, a car.
Right.
But selling a company is so completely different, and people completely underestimate how it hurts us emotionally.
It's your identity, and you can work off that, but it's also because we hadn't done the work on I hadn't done the work. I'll say right? Like that I hadn't done the work on understanding my purpose and what drives me. After we left, then I was like, I was just sort of like grasping. I had no idea. Like I didn't know, like you should be happy, and you don't get any, listen, this is a high class problem, clearly. Right. Like, but even in groups, like I've been heavily involved in EO and YPO and these peer-to-peer groups and Tiger 21 groups like that. And I'm a huge proponent of peer-to-peer learning. Right. And learning from others' experiences. There's a lot of that here in this podcast. Share from experience, right? Learn from others' experiences versus advice. But within my forum at the time, no one had sold. And so you can't get that same level of understanding or empathy. Like there's not, there weren't the communities online or other places to go to hear what people were thinking about. And so you're
No,
you're almost
absolutely
feeling
not.
guilty. Like you're like, okay, like I'm richer than I was beforehand. I should be happier,
Yeah.
but it affects like, it's not just your baby and your business. Like we're always going to build it knowing that we might sell one day, but it's like your identity. And then like we get into knock-on effects of your family. But then because I was young and immature and didn't really know what I wanted to do in my life, it came through as like stress and unhappiness.
No, absolutely. An exit can create so much confusion. I want us to slow down a little bit because I want to explore that experience you had for 2 years working for the acquirer. So in my observation, there are basically 5 things that people tend to romanticize when they agree, oftentimes too easily, to stay with the acquirer. And one of those things is that they think they will learn so much working in a big organization.
Yeah.
Another one is that they think they will still have as much control over the team, and then that the motivation will stay the same, and we touched upon it just now. And then the last thing is that people assume that their earnouts will be exactly what was agreed.
Yeah.
So I would like to get your view on those 5 things, how it worked for you, whether you had those illusions in the first place, and what you learned in those 5 aspects.
Oh, Anastasia, such a good topic. And this is what, and this is where I think it's not just, those thinking about selling. This is such an important area. So part of the reason we sold, again, I alluded to this, that, it was us doing the sales. We needed to build out a sales team. We were like, and it almost sounds kind of laughable of like, well, you just build out a sales team, right? Well, and again, if you put yourself in the mind of a 25 or 26-year-old kid, and again, there's no venture capital. And so I had some mentorship from family and that as well, but not at the scale we were doing. We thought, we're going to get, Forbes actually was the gold standard for selling. At that time, they certainly were. And I would say it's slightly different. We did learn a little bit, but we did learn something. But what we learned, we thought that we were going to get like an MBA in selling. And then what we came in to found at that point in digital media, it was like, it's whining and dining. Yeah, there's some elements of this in terms of like incentives and how you lay out plans. And there's some tactical things there, right? But like, it wasn't complicated. You kind of saw that the incentive plan, you're like, that's all it is. That's not that different from what we were doing beforehand. Okay. So, and then, at that point in New York, it was like, there was Forbes had a Forbes yacht, right? And so you could, if you had a large enough client, I'll get the number wrong, but it was like a big one. Like it was like, I want to say like 100 to 150 people on this boat, right? So you'd go at Chelsea Piers and it would go up and, so it'd be a brilliant night. And the kind of rule was you weren't supposed to talk business. And so when I saw how Forbes set up like the sales team and that, like, it was like, I wouldn't quite go say that we didn't learn anything, but we were underwhelmed after we saw it and got a glimpse to it. We're like, well, we could have done that. We could have learned that on our own. This was like, pretty simple.
Yeah, I can totally see how that probably added to your sense of regret that you felt, I guess, that you could have figured that out yourself and got into a better financial exit eventually.
And I've heard from people like, we think we're going to learn a whole bunch more about all the other parts of the business. Like, no, we were okay. Like big organizations succeed because they have this scale, because of this stuff. Usually they're not good at innovation. Usually they're not good at building new products. Usually they're not good at culture. Like there's all these things. Like I remember all of a sudden we had this thing where like we never saw anybody face to face. So people would show up at the office in shorts and flip flops, like including me and Wags, the founders. And we remember at one point getting like the handbook of like, well, men should wear slacks and women should wear blouses. And I was like, what are we in like the 80s here? Like it was. And so there's all these things. It was actually the opposite. It was all these things that we think that we were actually doing better, right? So yes,
Fascinating.
there were some there were some great people there. There was one general manager, and he would be real. And then the digital ad business, like how he would negotiate and kind of get the budget locked in, and how he would negotiate with sort of the big players in terms of trading off like margin for like certainty. And so like, yeah, I mean, you can always learn from people, but if you're going to sell to learn, I would really question that assumption. Control over people, like I said, that last example of the employee handbook, like we just had to throw it, like we had to adopt that employee handbook. HR said we had to do that. And so we're kind of like, well, if someone from New York wants to fly out to Edmonton and see that we're not wearing slacks, then so be it, right?
Another sort of expectation that's very common is that people think life will be less stressful once they work for an acquirer. There will be less responsibility on their shoulders. Would you agree with that?
It was so stressful. Stress to me is not being in control. Like,
yeah, okay.
It was like the number of nights that I went to bed super angry because you'd get some email and like you would give your opinion, and you're trying to learn how to be like an employee as well, right? And so part of that is probably not just on the other side of the acquirer. It's probably on the side. I want to say 50-50, but we're not. If you're the average founder, I don't think most aren't meant to kind of fall into line. I mean, you've had success by always challenging the status quo. And so as we would make really what I thought were dumb decisions, I would get super, super upset and frustrated, right? And so even though there wasn't the same economic upside, somehow there was like all these negative energy conversations. I don't know. It sounds cheesy, but like I don't know. I'm not that spiritual a person, but I always feel like you have a good conversation, it's like positive energy, right? You have a bad conversation, takes away, right? Like I spend a lot of time now thinking about like, hey, who can I be around where I get energy? Like I feel better after that conversation. How do I avoid those moments? There were just a lot of negative energy conversations, and I think it's because of that lack of control. And then after a point, I mean, you just kind of throw your hands up and go, okay, tell me what to do, boss. And it's like this passive aggressive thing. And then it's like, it's so painful because like, that's not who I want to be. Does that make sense?
Yeah. No, absolutely.
Our investment banker, his name was Stan. What's his last name anyway? He was awesome, right? He was tough. He was awesome. He really, really did a great job for us, right? So he actually negotiated with 3 parties. We had 3 term sheets, and he didn't go exclusive with any one of them. So one of the things he meant, which is a gutsy move, typically in that point when you have that term sheet, you would then go exclusive, right? But the second that happens, you lose your leverage. So one of the things he negotiated away was, instead of an earnout, it was just a holdback. So, we didn't actually have to hit any numbers, and it was in cash. So I think you raise a really good point on, whenever I'm talking to another entrepreneur that's going to sell, would you be happy with the amount today if you never received another cent? Because I've heard of so many situations where like you don't get another cent. And so we were fortunate enough to be able to actually negotiate that out. But we still needed to stay around for 2 years.
I have so many stories when people just didn't get any earnout, or they got so much less. Also, there are some other interesting stories that people would give up on the earnouts because they hated working for an acquirer so much that they would actually give up on the money. But then totally. They regretted that they didn't negotiate the deal differently.
Exactly, right. And I feel like sometimes, I mean, the playbook is for a large corporate to make life as difficult as possible, knowing that there's a chance that the founder will take off and not stick around for that extra money.
So it does sound like you had a good investment banker. Good job.
But the mental model that I think what you get to in this romanticism is what cash you get on close. Mm-hmm. And, if you get equity and you can hedge that in a way, I mean, the whole Mark Cuban way he did that with broadcast.com is, I think, is widely documented. So stock isn't bad if it's liquid stock, right? Or if there's a way to actually protect your downside. But thinking of that in terms of the purchase price is what you have on that day. If you would be unhappy with that, don't do the deal.
Yeah. Did you get any equity as part of your deal?
No, it was all cash.
All cash, yeah.
Yeah, because and also because the acquirer was a private company, and so we were, so there wasn't really an option to receive cash.
For someone who is about to sell and is debating whether to hire an investment banker or not, what would you say?
You got to get the best deal. So two things in professionals: get the best investment banker that knows experience in your industry. So the right lawyers that actually, not your lawyer that's being around, a lawyer that actually does deals. Like, you actually have to switch your lawyer, in my opinion. And then third, the right tax planning. So the tax planning actually saved us the most. We had this great guy from PETA, from Price Waterhouse, that showed up on the last couple of days and ended up, his fee was outrageous, but he made us back 10 times his fee, right? And I think that's true regardless of whether you're US, Canada, Europe, or anywhere else. That there's always ways that the right tax planners can get in. So he was actually the best bang for the buck. I would say that the investment banker. So at one point, we weren't actually in the room, but being able to negotiate back and forth, and like he did create significant value. We structured it so that we knew we could get an offer for X, right? Because we had unsolicited offers. So his fee, we negotiated very little up to that point, and then an escalating clause if it got over a certain amount. So he was really incentivized to go for the any extra incremental dollars, and did an awesome job at that, and more so than we could have done on our own, and also knew the market better than we did in terms of who was, and made that call to actually not go exclusive. So that was worthwhile. The mistake we made is we need to do a better job negotiating at the onset, like from that holdback. When what's paid, is it paid on the overall? I've seen this happen time and time again. The fee is based upon the aggregate transaction price, but then if you didn't receive 20 or 30% of it, you shouldn't pay your fee on that until it comes afterwards. But of course, every investment banker will want that fee on close, right? So that made for some fun conversations on the day the wire came in. But I think the main thing is, like, what I didn't realize after doing my first material deal is that switch between investment banker and lawyers. Like, the lawyers are the worst people at the onset because it's costing you so much money. But once you've actually decided to go with one party and you go from that negotiation to the sale purchase agreement, then your investment banker is actually your worst enemy, because he or she can't do anything else. And now it's the lawyer to protect you on the reps and warranties. Like, the investment banker could care less on your reps, right? And so managing those teams often, I think it's one of the things, like, if I wish we had someone who'd gone through the process, because, like, if someone was going to sell, I mean, for someone like yourself that sold multiple times, if an entrepreneur came to you while they were in a deal process and gave you the structure of the deal and said, like, help me see the forest through the trees, that's where I think as entrepreneurs, we need to help each other out, because we're always going to be outmatched. On their side, they're going to do 50, 100 more deals in their career. They're deal professionals most of the time. But most founders only ever get one or two deals in their life, right? And so we're totally outmatched.
All right. So shall we move to post-exit?
Sure.
So you're free from your employer 2 years after your exit. How do you feel?
There's a family dimension. There's a financial dimension. And then there's sort of like a emotional purpose side of it. Mm-hmm. I don't think my partner would mind me saying this, but, like, it was actually way harder because we were having kids at this time. So actually my daughter was born 12 days before the deal closed.
Wow.
So it was a slightly stressful time, right? Mm-hmm. So there's one dynamic of, like, oh, sorry, I'm getting called to New York while we've got a 6 month at home. Mm-hmm. Wasn't always a fun conversation. But then I think that the difficulty was that there was this extra layer of guilt on my partner, because, she had her career. I met her in business school. And as she's making decisions for her personally, she's like, well, should I keep on going with this job that I have now when we've got all this money in the bank while we have the pressures of motherhood and what time to stay at home? And so again, without telling her story and going into that, you can imagine that dynamic where beforehand, if you didn't sell, well, you just, you take your maternity leave and you go back to work and you kind of continue on.
Mm-hmm.
The freedom to not have to work actually creates massive stress and a massive problem. And I think especially for mothers, a huge amount of, I'd say motherly guilt, right? So we've talked about that a lot since that point. I mean, and again, I'll leave it at that because again, it's her story, not mine. But I do think that that's one thing that I didn't foresee, right? Like having more money is always better, right? Well, sometimes actually, the guilt that comes from that can be, I mean, it's hard. There's choices that you have to make then. Like sometimes that freedom results in choices that are emotionally painful. I think of selling as you have an asset that was illiquid, but very, very well, to now you've got liquid assets that you probably don't know anything about managing. So I'll give you two examples. Once we sold, we didn't do anything stupid. We didn't go buy a Lamborghini or anything I shouldn't say it's stupid, but you know what I mean? Like we put money just in
unnecessary.
Exactly. Right. And it's totally fine whenever, right? But we for the first few months, we said, we're not going to do anything. We just kept it in treasuries. Right.
Yeah.
But so I'm Canadian. We sold in US dollars. We had everything just sitting in US dollar, cash, basically. The Canadian dollar, the exchange rate right after we sold went from something like 1.25, 1.3 to par. So on paper, we were losing tons and tons of money every single week, single month. Yeah. So, and we did all the right things, right? Like we weren't. And then, so then you're calling the bank and putting in place these complex sort of FX collars and hedges on this. I don't remember, wasted $100K or something like this on some almost costless collar, right? To protect downside, right? But it was a different type of stress. And again, the whole thing of okay, check. I want it at entrepreneurship. I'm good on this. No, all of a sudden you have all these other problems, but you realize you're actually under equipped. How do you pick a wealth manager? Where do you go? Everyone's calling. Everyone wants something from you, right? How do you do philanthropy well? Do you just keep on giving when someone asks you? What if you don't have a philanthropic plan, right? Never mind getting into the family office side of it, actually managing in that way if it's of that scale. And then, so I was managing internal capital, and I'm a big Buffett disciple, read everything he's ever had, and this was the financial crisis. So I remember I was buying Amex's stock, and the value style. So it went down, bought a little bit more, came down, bought a little more. So you're kind of dollar cost averaging in, right? And then the market crashes in 2008. And so meanwhile, I'm literally down 7 figures on this one stock.
Oh, wow.
And I hit my position limits. I had a good policy statement, everything that went through, right? And I remember watching on CNBC, and Amex was at $15 or something like that. And Buffett was going, I would buy more of it if I could, right? I'm already at the 10% threshold. This thing is Amex will never be this cheap again. You can probably go check the stock today. It would be probably a 10 or 20 bagger from that point. But I'd hit my position limits. I'd tried to be disciplined, right? And so meanwhile, I'm down this massive amount. Now, in the end, it came back up and I made money off it. But that round trip, holy cow. I mean, I never had that amount of stress in the business running it. So I sum it up this way. Beforehand, your net worth was here, right? And you every month, every quarter, you go up and you're happy. Yeah. Now your net worth is here. But there's a little, you're still way higher than it was, but that delta, the change of that month, that was very stressful, right? And so this whole idea of you're this superstar, you just had this X, you have this, but you're actually a shitty investor.
Yeah.
And even myself, no matter how many
so
books
true.
you read, you don't know until you're down that and in something, until you're in it and you've hit it, you can't it's almost like the same thing on a business. You're not like, until you've had struggled to meet payroll, right? It's like, I don't say you're not an entrepreneur, but like that's sort of like most entrepreneurs you've talked to, like they've at one point been like, okay, I got to freaking mortgage the house, or it doesn't matter if you're Richard Branson or anybody else, you've had to go all in, right? Until you felt the pain of that on being an investor, you're not sort of battle hardened, right?
Yeah. Most people I talk to admit that they went down financially before going up, because you also have this trend, especially these days, to go into angel investing or trying to buy another business, thinking that you can combine lifestyle and running a business all in one if you buy a business. So that basically takes me to the next topic I really want to explore with you. Like, what did you do next in terms of, a new business, professional investing?
I made a bunch of
after you realize you're a horrible investor in public equities.
Well, and yeah, exactly. Yeah, the one example. I'd like to think I'm not the worst. It wasn't a great market for that, right? But I had a bunch of wins as well. I actually had a Bloomberg terminal. My claim to fame was be like, the one guy with a Bloomberg terminal in some industrial park in South Edmonton, right? Like, and I was actually just I spent all my day managing capital, right? So I did do fairly well in terms of but I was like it was like rights offerings, spinoffs, merger securities, just really esoteric, like kind of deep value stuff, right? And so, but when I was spending 40 hours a week just reading, like I could do okay, right? Kept on getting drunk. So as I saw opportunities locally, I made investments, really know what I was doing, and probably had too big of a position limit. And then what I've learned is like when you start buying private companies and you're the biggest investor there, when things go down, you're now the bank. And so the mistake that I've made over the years is going in and then wanting to be a good partner versus like, as much as everybody gives private equity, heck, like sometimes you got to cut your losses, right? Sometimes you got to put something in the liquidation. And so I've always I took my entrepreneurship side of being a good partner and applying that to the financial world isn't necessarily the best approach, has been my experience.
Yeah, absolutely.
So my public stuff was okay. Some of the private stuff was there, but then people kept on saying, hey, why don't we do the Investopedia for this industry, that industry? Think like really traditional, boring industries that hadn't yet moved online. So corrosion mitigation or industrial safety. So I took a couple $1 million, threw in, built a platform to cookie cutter pedia sites. So essentially I built a CMS. Like, keep in mind, WordPress, for those who are technical, wasn't, you imagine 15 years ago, you actually need to build from scratch. You wouldn't today. But we launched about 10 of these different websites, and they were okay. But I think the lesson there, as I reflect on it, is that I didn't want to be operational. And so I built the tech platform and said, hey, we'll be your partner from the technical side and try to get others to come in. And we didn't call it a venture studio, which I'm in a venture studio today, but like on paper, it worked perfectly. But I think what I didn't realize at the time was how much of it is the founder that really is just driving it, how much that grit, if you have someone that really wants to get it done, like how important that is. And so we had some success, but my life is now good. I'm not going to go back working at that point 70 hours a week, jumping in on it, right? I want to kind of almost mentor and coach from the sidelines, and it just didn't work. Like the sites that we ran ourselves that we controlled, we actually made some money with. Like, it wasn't Investopedia level. I mean, they were very profitable, but trying to have that passive income stream and replace that, Anastasia, was like actually super tough, right? Because remember, interest rates went then down to nothing. And so you're putting all this money into these new businesses and you're like, okay, like I've got like an infinite runway, but even after 5 years of not taking a paycheck and just putting stuff into it, you start feeling it, right?
So you closed them. That's what you did?
No, we ran a bunch of them. So what happened? Actually, this is how I got into AI in 2015.
Oh, okay.
Yeah, So we had a bunch of freelancers. So what I did differently is I built this platform so that I didn't have to hire any local employees. I could hire freelancers around the world. And so we were spending so much on those freelancers that in 2015, I approached some professors at the University of Alberta for a project around algorithmic content generation. So 2015.
Again, very early on.
Gen AI was not, there was no hype. It wasn't even the term yet. So the technology that enables large language models called transformers came around late 2017, early kind of 2018. So we were early, and I like to joke with Nicole, my partner, that hey, I was a visionary here, and she says, when you're 3 years early, you're wrong. But she was right. She was wrong. We're 2 years early, but we're early. But what I didn't realize at the time is that how a lot of the underpinnings of AI were actually developed here in Canada. So deep learning was invented in Toronto by a guy named Dr. Jeffrey Hinton and a student at Yoshia Bengio, as in the guy Yan LeCun, who's in New York now. But out west here, there's a gentleman by the name of Dr. Richard Sutton. He literally wrote one of the first textbooks on reinforcement learning. So like, to give you an idea, like it's called a top 10, top 20 school, depending on how you measure it, on the planet for at least the academic side of AI. And so there's a very small tech ecosystem here, though. And so we have all these people coming from around the world coming to study under these profs, getting their master's or PhD. And I looked at this and said, this might be the best place on the planet to actually, there's a surplus of data scientists and machine learning engineers. Yeah. So it's a complete accident, Tennessee. We were hiring for our own business. Instead of hiring 2 engineers, I hired 4. And then people kept on hearing that I could do this AI thing. And then all of a sudden we're like, wait a minute, maybe there's a model there.
So Cory, on the personal side of things, why did you keep working if financially you didn't have to? Was it this passion, or was it something else?
Yeah, good. Because I probably skipped over it. So as I really thought about it, because I didn't know myself, I didn't know what I wanted to do. I mean, that's sort of the unhappiness in the first couple of years. And I thought, okay, I want to be an investor, right? And it was okay, but what I miss is building stuff, right? And that might, and again, it makes sense in my mind anyway, right? Of like, because I really don't have to justify it to anybody else, to be honest, right? But it's like in going through of like, what do I like doing? I like creating teams. I like going from 0 to 1. I like that early stage from an idea and building out something, and can that become a business? And I love talking with, technical teams and being able to actually like translate between the business side and where there's an opportunity that like, I love building businesses. And once I learned that, then all of a sudden I'm like, you know what? I think I can build a business model around that. And it just so happens on the backdrop of AI, I thought like that there's a good, and again, park the rationale for it, but like it really was around a matter of like finding my purpose, not having that when we sold, always just saying add another 0. Cause I wasn't gonna be like, okay, I'm just going to add another 0 or 2. And like, that's what I want to do. Like I kind of thought initially that what it was, and I was just going to invest. And it's certainly easier to sit there in front of a Bloomberg terminal and just read all day, but I wasn't happy.
So you're basically saying that you were not getting much joy out of, let's call it passive investing, even though exactly, it's never like passive, but sort of not creating value.
Great, exactly.
You wanted to build and create value again.
It's building stuff is fun, but it actually took me 2, 3, 4 years to figure out.
Yeah, no, absolutely.
And even thinking back, I'm like, why did it take me so long to figure out? Like, right? Like, I don't know. You know what I mean? And I think that's where this podcast and groups like Tiger 21 or YPO are so important. Where now that it's not like the early 2000s where we've got all these groups online, we have an ability to connect with people around the world. I think I could have fast tracked that if I had those right conversations before I sold, after I sold, the whole way through.
Absolutely.
right? Like it's
Definitely.
because you just
Definitely.
need to take the
We
time
just,
and think.
yeah.
And it's like
Yeah.
it's almost like I don't know, it's self-discovery, or maybe just weak on that
Yeah.
side of like knowing who you are, right? Like at that
Yeah.
point,
Yeah, but it doesn't have to take that long, right? If you ask yourself the right questions, you can get there much faster. But how do we know what questions to ask? When I had my first exit, exactly the same situation. There was nobody around, no peer organization that focused on it. Now we are in a much luckier position to make these decisions.
did you feel
So,
did you feel embarrassed or ashamed that you didn't know after the first one? So I
of
sort of
course,
feel
I
like right now
did.
that it took me,
Yeah.
like, I'm sort of embarrassed that like even talking about it, like
Yeah.
I just feel a bit here, like almost going like I think that's one of the reasons it took me a long period of time is because I felt embarrassed to talk about it.
Yeah, I think normalizing the problem is one of the most important things to do early. And this is exactly why it's so important that we hear stories from other people saying, oh, I have no idea what to do. I remember that for a while I actually blamed myself. I was beating myself up for, being confused and not knowing what to do.
Yeah.
Which is just so unfair. And if somebody just told me it's perfectly normal, I think I would have saved a lot of time and effort and energy.
Yeah. Yeah, exactly.
Absolutely.
It
Yeah.
and one conversation could save you a couple of years. Just I like how you phrase that of like knowing even what questions to ask, knowing like, and listen, once you've sold, okay, you've sold, great, right? But then, knowing, do you want to do board work? Do you want to get back in the game? Do you want to just invest? Like, there's no right answer. But if you had that framework to ask you those questions before sale, post sale, and that connectivity with the others that are there, I don't think it needs to be a long period of time at all.
Yeah,
I think
I
you're
think
right.
no one can tell us what we individually should do. I think people may have very different desires, situations, but the questions to ask are actually exactly the same. We may answer them differently. And another thing I noticed that there's so much hubris, there is so much pride and overconfidence that sometimes we just don't think that what others are going through would apply to us, and
Right.
we're just overconfident. We talking about romanticizing. We talked about how we romanticize working for an acquirer, but I also found that post-exit, most of us over-romanticize three things. One is retirement, and some of us just go so crazy into retirement and reject work, reject business, and that's another way how we waste so much time because we reject something that we should actually explore. And then another thing, we romanticize professional investing. That's what you mentioned as well. I did that as well.
Yeah.
We think that we can just become professional investors overnight and we'll be
Yeah.
passive and our money will just grow automatically while we're having fun. And that's just a romantic idea. And then, of course, another thing we romanticize is starting a new business, because that also is not that easy. We need to start it at the right time for the right reasons and the right kind of business. And for that, we need to know ourselves quite well.
Yeah. So
You agree?
I totally agree. And the first two I think are 100%. I would say my comments or my experience on the third one, the first business I started it off the side of my desk saying, hey, I'll take my capital and knowledge of technology and allow that to scale it. And again, like we made money on it, but it didn't scale. The difference now versus I remember back in the early days of Investopedia, Wags and I would work all day. We'd be going back and forth between classes, frankly, and back to it. And then we would drive home and we'd write terms all night and we'd be, chatting with each other on, back then it was probably like AOL Instant Message or I don't know, something like that. Right. But like we would go back and, you'd have a rye and Coke and just bang out more terms, or I'd send off cold call emails. Like all we did was our life. I mean, we both had girlfriends, that turned into wives after a while, but like we literally just worked. I don't know, like it didn't feel like you're working 80 hours a week because that's what we love doing. Well, when you're starting a company in your 30s or 40s and you've got capital, well, you've got a different level of lifestyle, you've got a different burn rate, you've got, often a family, all these other things that tie into it that make it a lot more difficult to go all in. And I mean, with what I'm doing right now, I mean, I think there is a debate. Some days you wake up and you're like, why did I go back to the 60 or 70 hour weeks? Right. And like, I love doing it. That's the thing. I absolutely love doing it. But then, there is this, beforehand, you had no options. You had to do it because there was nothing there. Right. And so the solution was, or failure was not even an option.
Yeah.
Now, what I've done a bunch of times when I've gone in, because I've said, like, I want to prioritize my time, and then I put capital to replace my time. For me, that hasn't worked. If anybody can figure that out, I'll pay them $1 million, right? Like, I have not been able to necessarily scale that, right? Like, I'm still going, like, I'm an entrepreneur, I'm a builder, right? And I'm trying to build the right systems around me. And so now what I'm having fun doing is building that scalable system, but it still needs to be me in the flow. I still, like, I've now come to grips with, like, I like being operational, and I need to do that to succeed, at least at this stage, for where my next company is.
So, Cory, your kids are now 17 and 15, so you're
Correct.
Quite an experienced parent. And I'm really curious.
But yeah.
You also mentioned that your girl was born basically at the same time when you exited.
Exactly.
So
April Fool's Day, April 1st, and we closed on April 12th.
Amazing. So your story of an exited founder is as long as your story of a father, which is just fascinating for me. How did you reconcile and combine these things?
Oh, man. We did have the flexibility as the kids were born to take some time off. I found that, I was home for, I don't know, I want to say 6, 9, 12 months. My wife might say 3 to 6 months. I feel like the great thing is we had the flexibility to travel more, to be that, like, I didn't go back to work right away on that. And so I feel like, especially when the kids were younger, we had a lot of flexibility there. And as I look back at all the trips we had, and it was nice to be able to go, because you don't have a day job. We would go in March and hang out in Palm Springs and be around the pool. And again, as a Canadian living in the frozen, north, right? Like, there's things like that we did that I think gave us a lot of flexibility. And then, when it came to sports and being able to do that, right? So I think that it allowed us, when the kids were younger, to be really, really present.
Many exited founders find their purpose in children at first before they move on and find purpose somewhere else. Did you feel that?
Probably not for myself, to be honest, but I think for my wife, I think yes, right? And again, there was also the dilemma and what I think is actually a hard problem that actually very few people acknowledge, in terms of, like, your partner there, and the difference in terms of the freedom to make those decisions, and the difficulty around that. But yeah, for myself, probably, I mean, you want to be a good dad. But I mean, I guess part of me wishes maybe it's like, you're just, everything was just like that, but that's just not, there's this balance between wanting to be a great dad and doing that versus dedicating your life around that. That just didn't come, right? Maybe I feel a little bit guilty about that, for not feeling that way, but to be honest, it just, that's not how I'm built.
I'm actually very happy to hear that you did it that way, because I see so many stories when exited founders feel so guilty that they hadn't spent enough time with their kids before. And obviously you didn't have the kid while building a business, so you were lucky in this sense. But there's so much guilt accumulated, then they make the decision to go into full-time parenting, which is great for some time. But if you get stuck in it for too long, then you are in that situation when you no longer a fit for your next business, or you're confused, and it becomes much more difficult, and then you settle into this parenting, full-time parenting situation. But I also noticed that for most people who go into full-time parenting after selling a business, they only really last for about a year of genuinely loving it, and then they want to move on and do something else on top of it. But sometimes they get stuck. So I think you were extremely lucky that you didn't have that burden of guilt from being a non-present father when you were building a business.
Yeah. Well, but now again, so I've been at this current one for 6 years. I work with my partner as well. So I would say that as the kids have been in their teenage years, that if you asked especially my daughter, she would tell you that we work way too much and we're never around. We're always traveling. Right. And so, there's this, so I do have some guilt over that now, what we're doing, but there's this balance of
you
like,
have
listen,
some
like,
guilt.
I was there for like like we were as present as you can get for the first, 10, 12 years of your life. And then, we started this other business. So you try to balance that off. And so sometimes with travel schedules and that, so the guilt came maybe the second company around on that, but I don't know. I'll be interested in talking to my kids.
But aren't you an amazing role model though? Because you show them a life of somebody who cares a lot about contributing, and it doesn't matter how much we tell the kids about it, unless they show their parents living this kind of life, they will not have a model.
In my heart of heart, like I hope that's the case. Like I believe that'll be the case. Like I think involvement in the community, the philanthropic side, and then the business of trying to build something meaningful. I'm hoping that when my kids are adults, we'll have a conversation around that. And I listen, like teenagers are tough, right? And so teenagers are at the best of times mad at everything, and so. There's certainly a guilt, even though that there's certainly a piece of that going, and this kind of gets back to the core idea. Well, should we just have not started our next business? Like, because it's interesting because like we've talked, my whole purpose has been around being able to build and start something again. And again, not tying your identity to the company, but tying it to the building and like that, like being able to achieve something meaningful. And at some point you're like, you're doing that versus, I could just stay at home and be, not just stay at home. I don't want to say it that way. Staying at home can be the most important thing in the world. For what I'm saying is I could not work and just be picking the kids home up from school and then this and that, the entire time and being there. You could do that. I wouldn't be happy with that. So I think I'm doing the best job I can at being a dad. I think I've been a great dad. I think I've been there.
I'm not sure your teenagers need you. I'm not sure your teenagers need you 24/7. They probably want their friends more than you.
And then there's that too, right? And I think back to like, hey, I'm around way more than my parents were. Like, growing up in the 80s, like part of me think of like, how we were raised and hey, you know what? Head out in the street and it's like you go play street hockey and ride your bikes around and like we'll see you for supper time and disappear for 6 hours, right? Like we do so much more than back then, right? But versus what society is saying or what so many other parents are on right now, like they're like never mind like traveling salesman that like was never around, right? Like so there's an interesting parallel in like your purpose versus kids, and again the strain of the freedom to make the right decisions, and then how that then manifests itself when you're trying to balance those things.
Yeah, true. Cory, this leads us to the hottest question in our Tiger 21 community, which is how to raise kids with wealth. What approach did you take? How to avoid them being entitled, lazy, all of that?
We unless my kids watch this, they don't know any of the details. And The one thing that's come up, just as an aside, with our house, like friends will come over, and it became pretty clear in primary school when people come over and said, "You have a mansion, right?" And so the kids didn't know any different up to that point. Like I drive a Honda Accord, right? We've taken nice vacations, but we've like they don't. There's not a whole lot of ways they can see it, and so we're very much taking the approach of keeping I mean, they know we've sold a company. They know that. They know clearly from our house that we're not poor. But we've very much taken the approach of saying, hey, we'll get them their education and we'll support in that way. But I mean, the plan is really to have them on their own. Like they're going to have to work. They're going to have to do the things. They're going to have to create their own life. And, you know, even if we both got hit by a bus, the estate plan, they won't get a dime until they're way into their adult ages, so that they can, we want them to have all the opportunity in the world but be able to pursue and figure out who they are without being impacted by this. And so I think a lot of people have that idea, but how we've actually implemented it is just to try to keep it as separate out. Like we're not looking for them to work in the business. We're not looking for them to work in a family office. It's go do what you're going to do. And it's not just find your passion, it's figure out what you can do that's meaningful. Figure out what you can do where you can actually earn a living and contribute to society and be happy.
So are you inspiring them intentionally to become entrepreneurs?
To my dismay, I think the hours we work might actually be doing the exact opposite. I wish I could, but it pains me. Like my daughter said, she'll never start a company because she sees how hard her parents work. Right. And so we'll see, like, again, it's teenage years, we'll see what happens over time. Right. And so again, we're getting some dicey topics here. Right. But like, I don't know that I kind of do think of being an entrepreneur as a disease, right? Like, you know, certainly people can nudge you along to it, but once you get into it, you can never go back. And I don't want to unfairly push someone into it it's not in their blood. I mean, it should be in their blood. You know what I'm saying?
Yeah, it kind of should be.
It should be, right? And so
Cory, I wonder, are you doing enough to show them how fulfilling that hard work is?
Oh, no, that's a good question. I'll have to ruminate on that one. The fact that I can't say yes probably gives you your answer.
Sorry for putting you on the spot like this, but it was just a logical question.
But these are the most interesting questions. These are the most difficult questions, right? So again, I'm from a small town in the middle of nowhere. I've always said that I want my kids to be comfortable. We don't have a family farm anymore, but like, you know, out riding horses, and in rural Alberta as in New York or London. Now, our kids don't go to private school. Our kids don't go to that. And frankly, as they've been exposed to some of the stuff, like especially through YPO, it actually hasn't been super good because we've, you know, like our kids go to public school. They don't have like fancy cars. They don't have all those other things. And so even tying into sort of second and third generation wealth and exposures to that, frankly, they get ostracized a little bit. And so it's interesting trying to strike that balance, being sort of like, I don't want to just say middle class, like just sticking to your roots, but then also being able to be comfortable anywhere. To me, that's success, right? And so we've spent a lot of time trying to, less on the entrepreneurial side, but more about trying to like being confident anywhere, right? Because like it's one thing if you grow up in Manhattan, right, and you're always there and you're always in that circle, right? But when you've grown up in smaller, you know, in the middle of the country, right, it's different.
I don't know. I think it's quite hard to raise kids in big cities too, for different reasons. There are all these confusing messages.
Oh, totally.
People in big cities tend to say, "Oh, it would be so much easier to raise kids somewhere in Canada in the middle of nowhere."
Well, and so I do think it's easier to be there, but I also want to have them to be success so that when we go to New York, that like you're not just, it's this balancing act. It's wanting both, right? It's wanting those kind of like the authentic roots with the ability to have a global mindset, right?
Yeah,
And
of
so
course.
finding that balance there, that's been a tricky parenting exercise.
Yeah. Okay, so what's your mindset today comparing to when you sold the business with respect to operations and systems and all of it? How would you summarize that?
Oh, I think way more like in terms of like the operational side of the business. I mean, just way more sophisticated in terms of like actually having a value-based organization that's driven by impact. Like success now, yeah, I want to make a lot of money. I want to build $1 billion software company, but what would be really successful is being part of a team that used AI to cure cancer, or building applications that have a material impact on energy transition and climate change. And so we talk like applying AI to elevate human potential is our purpose. So it's building tools that help people make better decisions and applications that we think are going to change industry. So like I would have never thought about that in my 20s. So I think from a high level, there's that. I think there's a different level of, I know I'm an amazing CEO for the first 50 people. I know now that I'm not necessarily from 50 to 250. I've got work to do. And so I need to find the right mentors and people around it. Like I know my areas that I need to improve on, I think. Right. But
so I heard some really important things here, Cory, which I want to make sure we emphasize. So it sounds like you have this rare balance between being aware that you want to continue achieving and create more wealth on the financial side of things, and yet you are primarily driven by the desire to contribute the best you can, based on all your experience and understanding of the world.
Yeah,
is that a correct description?
To build something, right? Like,
yeah. So you basically want to keep working, right? You don't want to retire and not do anything and just see your account grow, which is where so many people get stuck.
But I love working. I love the challenge. I love bringing together teams and finding new ideas and probably the biggest positive plus energy things. I love talking with other entrepreneurs who have ideas, right? And like, can I help her succeed in this business? Can I help him in terms of capital? Can I, right? And so like that gets me going. It just took me like a decade to figure it out, right?
So Cory, I'm loving this so much and I'm getting so inspired. And I wonder if you can help a category of exited founders that get stuck in that retirement situation. And I know you're listening to my podcast, so you probably heard guests who were incredible exited founders. They built these fantastic companies. And I talked to them like 10, 13, 15 years after their exit. And they've been in this retirement all this time. And they tell me how great their lifestyle is. But then when I ask them, okay, do you have a sense of purpose? They don't. And they say, right. Oh, no, one day I know I will build another company. And what worries me in this situation is that would they still feel fit in business sense, like entrepreneurially fit? Right? Because then it's very hard. You have all these habits around your lifestyle, right? You've relaxed and you're not entrepreneurially fit anymore, right? But yet they really, really want to build something again. So what would you tell these people? Because you avoided this trap successfully.
Well, but usually I would go into detail, like, because again, when I sold and then a couple of years to earn out and then I was investing and then dabbled with it, I would say the biggest thing I learned is that going halfway in didn't work for me. And so I think it's probably a mistake to get right back in the game, like in 6 or 12 or 18 months. It's like, hey, take some time and hey, for a couple of years, our kids were young and we traveled over 100 days a year. And like, there's lots of amazing things there. I, everybody's different, and some people being completely passive and working on that and say, hey, maybe you want to do more philanthropic goals. I think that you could have purpose in philanthropy in a big way, for sure.
Yes. Yeah.
If your purpose is building, and if you do want to get back in the game, being able to acknowledge your current situation and like that, it's just because I thought doing it the next time around would be easier.
Of course.
Building a company is always freaking hard. It's always hard, right?
And exactly my conclusion too.
It's always your entire life, right?
Yeah.
And so, I guess I made, as I'm talking through it, I made two mistakes. I went half in trying to thought that I could almost mentor back and forth and replace my entrepreneurial grit, if you want to call it, I guess. I don't know, but like with capital. That has not worked for me. That's made bad investments, and being a good partner versus a good investor are different things. And then understanding that it is just thinking that because you've had one exit, like, you've always learnings, you can scale it up faster. There's things you could do better, but there is a natural growth of businesses, and you can't just fast track the entire process at all. And it still is all encompassing, right? And how do you build a situation with kids and different things around that to acknowledge that, like, you can't be that same 22-year-old. So that's where I let down. So and listen, if someone's listening here, I'm more than happy to have a conversation. Just ping me on LinkedIn on this or anything other topic.
I think the whole lifestyle versus work or contentment versus purpose is such an important dilemma. I actually published an article recently about that. I call it the exited founder's dilemma because it's so common. And just based on all the stories I've heard so far, I came to the conclusion that the best approach to this is to focus on contentment first, focus on lifestyle, on recovery, on your health, but for a period of time while figuring out answers to questions. But then if you do decide to have a business and really have this sense of purpose, it's not very helpful to wait for too long, because then it gets harder. It's this balance. Like you can't start a business too early before you answered very important questions and before you rested properly. But also, it's very hard to do it too late. Like timing is so critical.
That resonates with me big time. And I've seen that people, like I can think of half a dozen examples like that waited too long. And now you see this with people who retire, whether it's sort of parents or grandparents or, kind of just forget, not necessarily just entrepreneurs. When people retire, all of a sudden they're so busy, right? They go down to Mexico or wherever, and they go to somewhere in the Caribbean. And it's like, they're so busy. All that. Well, what did you do? It's like, oh, well, I had my workout, and then, met for lunch, and then, oh my goodness. And then I had a doctor's appointment, and that was 2 hours. And you're like, you did all that stuff when you're raising a family and running a business. And so even entrepreneurs, once they've gone, you fall into that trap. And so I think you're right. That really, really resonates. It's the Goldilocks. It's like that right away is too quick, but then there's almost an expiry date where then you're out of your network, out of your connections, and
then you develop self-doubt, right? Then you're not even sure you can do it. And then there is more to overcome if you try to do it later. But another thing I found is that we only get a sense of purpose when we work, when we sacrifice, when we accept a duty. We don't get a sense of purpose from just pleasing ourselves. Like if we are stuck in self-indulgence, it's not going to give us a sense of purpose. So whether it's building a business or whatever it is, it will have to be work. And I think if people don't have a clarity on what actually gives us a sense of purpose early on, we are looking for a wrong thing, or we just ignore that in our romantic ideas about how wonderful it would be for us to just enjoy life all day long.
And I think the advantage that you have the second or third time around is that you can choose something that your work is tied to the impact that you want to have.
Exactly.
And
This sense of contribution. Yeah, it's
Yeah.
what you were talking. It's so important to understand what it is I'm actually contributing to this world, right? There is a point in our life when it becomes very important, because I think humans, early on we're just learning to survive. But once we've learned to survive, once we've learned the skill of securing resources, we naturally want to contribute, to give something. And if we are not given, then it becomes a very unhappy existence.
Yeah, totally. And you can almost do the Elon Musk, Bill Gates comparison there of Musk saying, I'm making more of a difference through my companies for climate change, interplanetary, yada, 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 versus Gates and the foundation. And neither is right or wrong, but like, I think it gets there. It really is the thing though, that if I can build on your last comment, there's almost this like safety. I think how much can you ever be really safe? And so there's this debate of like, okay, if you put X million away and just have that in treasuries or have that in cash, and we know we'll never have to work over again, I'm going to do this. But I always find that like all the amazing, you almost always go on all in. And in some ways, like entrepreneurship's like a disease, right? Like you're always like, well, I've always got backup, then I can go higher, and I can always, and you could always put in more capital. And we've done that, like, and so is there a way to have that balance? I think that's something that I'm still striving and trying to find. Like you want to make sure that your kids are okay in your estate and you got all that done, and it's easy in theory, but I'm curious, like your thoughts on that one afterwards. Like, is it even possible to say, I'm going to take X amount, put it away, and this is my thing here? Because what happens if you go through and you go through all that and something's not going well? You're always going to go back to like all the resources you have, right? Or I don't know. I mean, do you see what I'm saying? Like the safety in that side of it versus like almost having a free role in the next business. Whereas when you're first starting out, everything's on the line, so you're totally in. Whereas, is it ever possible to not be completely in?
I actually found that creating financial stability and some sense of safety is extremely helpful for the next business. And that realization, unfortunately, came to me a bit too late, because I was very much into this. I'll go all in my first attempts to create sequels after the first exit. Right. But later I realized that if we actually have sufficient sense of safety, and that's a very personal feeling, we need to figure out what sufficient means for us. But right. If we have that sufficient safety, kind of put aside somewhere, we stop worrying about finances, a lot of energy and motivation gets released. And then we focus so much more on our contribution, because we feel safe. Like if you think about, the Maslow pyramid, we have the financial safety right at the bottom. And if we are worried about it all the time, then our focus is there, our motivation is there, our energy is there. And once we have this sufficient satisfaction on that level, we naturally want to do other things.
Yeah.
So I personally came to the conclusion that if early on we actually take some boring but necessary actions to have that stability and to decide what part of our exit wealth we want to play with and what part of our exit wealth we devote to stability, it's very helpful.
That resonates. I think that is something to strive for, that mental model. It makes me think of something Branson has said, and I'm not friends with Richard Branson or anything like that. We were on Necker Island once, and so we had some time we could hear his experiences, and he talked about on his way to becoming a billionaire, mortgaging his house 2 or 3 or 4 times, right? Like it was like this like consistent, and so you see these stories of being on the edge, right? And then when you're on the edge and having the discipline of like, okay, I'm putting this in my safe pile, but then always having to go in more, always trying to come into that. And I mean, like even like Tesla 4 years ago was 1 month or whatever, 1 month from bankruptcy, and now it's $1 trillion company, right? And it's all these stories of like being like all in all the time. And so it'd be nice to not have to be all in. And I think your way is something that is like a mental model that all exited founders should think about in terms of like, how do I get to that? Because can that unlock more of me not having that unnecessary stress maybe?
I think this kind of masochistic approach, financial masochism, often comes from the idea that if we're not hungry financially, we will not have motivation. And for some people, it's subconscious. For other people, they realize it and they say, as an entrepreneur, I have to always be dissatisfied. And we,
Right.
risk our money to put ourselves in this situation of being dissatisfied because we're so scared of being satisfied. It feels like death. If I'm satisfied, I'm no longer motivated. What I found is that it actually based on ignorance of the fact that our motivations over time naturally change. And while fears and greed are great motivations for the first business, there are motivations of duty and love that are much more appropriate for our later ventures. And it's perfectly okay to be satisfied in terms of greed and even personal fears. It's perfectly fine to be beautifully content and then still be very, very driven to do work because we love it, because we feel it's our duty to contribute to the world with whatever it is we know, and out of genuine care for other people, our employees, our customers, whomever we can influence. And I think the lack of understanding of those higher motivations actually keeps people trapped. Like, I like to ask my guests on the podcast about how they interpret Steve Jobs' famous phrase, stay hungry, stay foolish. And what I find is that many people interpret that as financial hunger. But if you look at Steve's own life, even superficially, it's very obvious that he was never motivated by money. He could never possibly have said that phrase meaning money. What he meant is that hunger to do what you are meant to do. In his case, it was creating beautiful and useful products for people, right? In your case, it may be using AI to elevate humanity.
Yeah,
but that's a different type of motivation. It's actually much more powerful. But to fully embrace that motivation, it's actually very helpful to be financially secure, to feel financially secure. Like for me, for example, my mission is helping these amazing people who created so much value to get unstuck and actually keep creating value, keep making our society better. And I feel if I'm contributing to this is so important. This is what makes me, get up in the morning and work.
Yeah.
And I'm so
really
lucky, so grateful that I don't need to do it for money because it wouldn't be the same thing.
That is a really, really interesting train of thought. I'm gonna have to think about that, process that for a while, because as you say that, I'm like, I have 100% done that myself. It's almost like that financial financial masochist, right? But I'm curious, maybe a related concept, because people talk about when is enough for business, but like when can you be, or when is enough from a financial perspective, but when is enough for what you've accomplished, for what you've built, right? And how do you strike that is it, creating that balance with staying hungry and having that sort of that edge, but then also being satisfied with what you've built? Like, I find this, we're taping this in December. I always found a hard time at the end of the year because I'm always unhappy about how much I've accomplished out the year. Even if sometimes you look back at it and rationally, that, okay, I've actually done a lot of really great things. It's like, it's almost like, well, do you need that edge? Like that edge that sort of it causes angst, this anxiety, versus in the same way that you're talking about on the financial side, if you can have that, can you open it up by just being satisfied and being present of those learnings and then building on that? See what I'm saying there? Like I find that's
absolutely
been one of the hardest things about the next time around, right? It's like, I should be doing more faster.
No, absolutely, Cory. But I also wonder if you can reframe this into thinking, oh my God, there's so much more I can do, and be inspired by that. Because that's essentially what it is. You feel you haven't done enough because actually you just see how much you still can do. And that's a very different angle, which may be more inspiring, more energizing.
Yeah. See, it's almost like you've thought about this a little bit.
Yeah.
I'm a big mental models fan, right? And so I'm always trying to, like, Charlie Munger talks about your lattice work of mental models. And, you can having that success at a young age, like at 27, I think builds almost this hubris and whatever of saying like, okay, maybe there's a little bit of luck on timing, some good hard work on that. Maybe there's definitely some, great things we did on that. But then I think being more humble in terms of where you've got weaknesses or where you've got areas that need to be growing on, and being able to, we all understand the concept of growth mindsets, right? But it's not like you're always just in a growth mindset. It's really easy to get emotions involved and then fall back into these other areas, right? And so thinking of this as it's no longer just like that I'm on one path as an entrepreneur, but at every different stage, it's like reinventing and reinventing and reinventing. And as you hit those inflection points, being open to talking to the right people or learning from others, and leaving that hubris behind, leaving that and just saying at this stage, how do I surround myself with the right people to know what that next stage is, right? So thinking of it as more of like that journey. If I could go back to my 27 or 28-year-old self and convince him of that, that would have been amazing. And so hopefully even talking about some of it, the mindset and these things of it, like, versus just dismissing them, right? Hopefully there's one nugget that someone can take, or there's something of that. There's an experience to go like, wait a minute, right? And then to what you said beforehand, being able to do that and having those conversations and those relationships to be able to then ask the right questions of yourself. That's it. That to me is what I wish I knew faster. But hey, know that now, and I've still got, at least 30 years, and hopefully with all the maybe we can invest in some longevity stuff, and hopefully it's longer than that. Then you can do more, more stuff for longer, and have more fun, right? And build more relationships with amazing people around, because like there's never now is the best time to be building stuff. Like the opportunity that's out there in technology, it's like the next decade's going to be amazing. And so anyway, I could ramble on about that, but like there's that. You asked a very difficult question, so let me pause there versus at the risk of rambling on.
The bottom line is that if only you knew what you know now earlier on, so, say, you sold your business and you knew that, it's this new purpose, it's this, sense of contribution that should be pulling you forward. Because what we're doing, we're stuck in this selfishness for a very long time. We're like, oh, how can I make my life even more comfortable? How can I invest and get, 0.5% more return? We are so absorbed by things that are essentially very selfish, and they never give us the sense of fulfillment. Mm-hmm. And then much later, in 10 years, 15 years, we think, oh my God, if only I knew how beautiful it is to be pulled by something significantly less selfish, but at the same time, embrace some selfish needs, right? Embrace the need for self-care, embrace the desire to grow our wealth without guilt, right? If we knew how to create this balance, that's what I'm really trying to achieve. I'm trying to bring people like you and show your story to those who just exited, to show them, look, don't believe me, but look at Cory's story.
Here's the way that Cory fucked up.
Exactly. Exactly. Don't do that, but then look at where he is today, and maybe you can get there faster if you learn from his experience and ask yourself the right questions.
And if we can support each other and build those connections, right? Like even 20 years ago, we would have never mind that podcasts weren't a thing, right? But like, yeah, you'd go to conferences here and there, you'd meet someone, but now the connectivity, or and again, groups like YPO or Tiger or whatever, right? Like you go, that entrepreneur who just sold in India, who's moving to Dubai, and that will be like, what's inspiring is like hearing stories of what other people are doing and then going, oh man, look at how much more is out there. Look at this, and it's always that positive energy conversation, that additional piece of it that like that makes you ask another question or see something in a different way, right? Like that's what's so exciting now, right? That's what's exciting right now about being able to build and invest um, but it's just about conversations and trying to be open and again get rid of the hubris and the closed mindedness of my 27-year-old self and just even on this one, like, I've been on a lot of podcasts. I've not really had a question that's been like, so that I've not really, how do you actually answer that? So whenever you have that question, it's like, okay, that's something I need to think about.
But I also think that lots of people underestimate how important it is to be intentional about the skills that we need to learn early on. And one of the skill I think is so important is this skill of creating inspiration deliberately, whether it's by talking to other people or to exposing ourselves to what's really inspiring and important in this world. Like I can see, for example, that you're so inspired by what's happening in AI, and I can see it gives you energy, and you are feeling, now is the best time to create because look at all this exciting stuff, right? But imagine if you didn't know that, if you didn't put yourself in this information field where you get the inspiration. And I think this is just so important.
Being intentional about inspiration. That's a
But
how many people actually do that? I think inspiration. Isn't it natural to just think of inspiration as like something randomly that happens, right? But to seek that out, I like that.
Yeah, but if you expect it to happen randomly, you have no control over it, right? You just sit there waiting for random things to happen to you, and this is how we waste a lot of time and energy.
Totally. Well, and I mean, I think there's also some dynamics that, like when you talk about the skills around this, I mean, there's also, and not to completely stereotype, but I think most men would probably have more of an issue with that because it's, you've got to be vulnerable and open up and talk about the areas you're bad, and then even acknowledging that, like, hey, even though you're really successful in this one area, there's all these other soft skills there that maybe you're not so strong at, right? And I mean, again, that's where sometimes the peer-to-peer groups come in, but there's no course, there's no like roadmap, right? Like a lot of it is and maybe that's more what you're building out, but the tricky part is being able to actually build out that those frameworks and the question.
I definitely want to create more of that. I think it's extremely important. It's not just communication skills, but it's also the way we feel inside. It's this non-transactional mindset with respect to other people. And that we need to, and sort of this ego that prevents us from opening up because we think everybody wants to see us as heroes. Sometimes I approach a person and I want to interview them, and they're like, oh, no, wait. I want to first make sure that my new business is success. And if it's success, I'll come to your show. And I'm like, no, I want to talk to you now because you're struggling.
Well, Anastasia,
and that's what I find interesting.
I said that to you because, I mean, some of the headlines of that, I'm like, oh no, my exit wasn't as big as, I didn't have $1 billion exit. I listened to that person, 3 shows ago. I'm not as big as him. Right. So, I mean, I did that same thing to you.
And it's natural, but I think it's by overcoming this, we can open up, right? It's a muscle we need to build. And we do it a couple of times. We see that actually people love us more when we are more vulnerable. We get this positive feedback from the world, and that's when it becomes easy. But it's the first step that's hard.
Oh, no, you're right. Well, I mean, I will admit it is intimidating talking about all the things that you've messed up, in a good situation, right, after an exit, right, and all the emotional stuff there. It's emotions. I'm told that emotions aren't exactly my strong suite. So I'll keep on doing stuff like this, like to work on it, right?
Well, I think you're way above average in my book. Oh, Cory, thank you so much. I loved our conversation so much. I need to let you go because otherwise it will continue for hours. But I will ask you the last question, which is the same question I ask every single guest I have on this podcast. How do you want to be remembered?
I want to. There's two elements. I want to change the culture and mindset of Canada and where I'm in Alberta in terms of to be more entrepreneurial driven and to embrace business. So that's more of a societal piece of it. And then, if we're talking from a business perspective, I mean, I think the most important thing is that my kids over the long run respect me and have learned and that I've given them the opportunity. But if I could make a dent in cancer, if I could make a dent in a major disease, if we could actually bring together the problems in the healthcare system with data and AI, I'm on my deathbed. Cure is a big word, right? And so, the goal is defined in my head. Like I'll know it when I've accomplished it. But if I can bring together those different groups, bring together the health side, the AI side, and figure out how to kind of throw enough capital behind that, that would be success.
Yeah. This is so beautiful. Thank you so much, Cory.
This has been so much fun. Positive energy conversation for sure.
We'll have to do it again.
Plus two.